There it goes. Good evening, everyone. Welcome to another edition of Moffat on Money, Saturday Night Live and Rambling. Sorry for the delay. Literally was waiting on StreamYard to connect there for a minute. It just kept spinning.
Yeah,
So glad to be with you.
I got something happened to my audio.
Ellen is still having technical difficulties.
Oh, stop it. I was connected. Now I don't know what's going on.
Uh, just keep chanting WAP, WAP, WAP.
We are professionals.
We're professionals. We're professionals. Um, Good to see you. Well, Sky, good to have
There we
seen
go.
you.
Oh,
And that's about as good of an excuse as I can imagine not to watch the show. Hope you have a great time with your grandbabies. Enjoy the hell out of them. Jane, Melissa, good to see y'all. Thank you for
absolutely.
being with us tonight. The
And I'm
the
sorry.
family's back in town.
If I looking in weird places, I tried. I have a bigger monitor, but I had to kind of put it up because it was below my other monitor and I couldn't see, and I don't have a whole lot of sideways room here. So I'm kind of looking up into ether. It's not just something sparkly. I'm just trying to keep up with everything. Sorry.
Yeah, she's actually not tripping. She's just trying to
No,
follow the monitor.
I'm just special. Short but special, apparently.
Hope y'all had a good week. For those on the replay crew joining us a little later, appreciate
We
you
love
too. I
you.
always try to give you some love. Um, we've had several people that were on live, and then the schedule just didn't permit, so now they're faithful on the replay crew. Just a little holler out to y'all that we miss you, but do appreciate your support. Melissa just got back from a puppy pride party. So tired. So
I
did Green Bean come out of the closet or
Aw.
that's funny. Puppy pride party. Hadn't heard that before, but you try saying that 10 times fast. That's a mouthful.
Yeah, it
But
is.
glad you made it back. Good to see you. Tell Green Bean we said hey and hope he had a great day at the party.
I'm still adjusting. I do apologize. This new setup has got me a little discombobulated.
It's all right. We'll all just kind of sit back and watch you
Fiddle.
fiddle around. Yeah.
Thanks. He's
So, in other words, what you're saying is he's a happy pug.
I bet he's a very happy pug.
He got to check out a bunch of his buds
And butts.
and butts. Now, it's a WeHo Pride weekend. What's the WeHo? That's new to
This
me.
this is the day one of the LGBTQI.
Right. I knew, but what's the WeHo?
Oh, I don't know.
Yeah, that's what I was asking. I don't know if that's like a little part of the city or West Hollywood.
Hollywood.
Hollywood. Okay. Gotcha. Well, glad you made it back. Jane,
Absolutely.
how's everything up in the northern part of the country?
The Northeastern.
Hope the northeastern part. Hope you are doing well.
Well, Clay, you should know because you always say that North Carolina is in the Northeast.
No, I don't say it's in the northeast. I say it's in the north. North Carolina.
When
South Carolina.
in the East.
Well, I don't say it's in the east. Northeast, you normally think of the region of the country that's normally referred to as northeastern U.S.
Yeah, I was making a joke about how. Never mind. Okay. Weather's
Weather's
fantastic.
been
Here on the patio. Great. That's awesome. It's pretty here too.
yeah. Had a friend down in Alabama posted that they were actually wearing a light jacket this evening and loving it, which that just never happens in Bama. So
Well, I was
More,
yesterday when I was in Lincolnton with my grandfather. It was like 65, 60, and I only brought like short sleeve shirts and shorts, and I had to. Thankfully, I actually did pack a long sleeve shirt. I had to put that on. I know that's rare for me, as Clay obviously knows.
yeah, she usually runs a little warm.
Mm-hmm. Mm-hmm.
Um, Anybody heard out of Carson? Hadn't is he doing okay?
I need to reach out to him. Well, yeah, I did hear
Yeah.
from him a couple of nights ago,
Okay.
so
Yeah, I know
he's alive.
I know he's got a lot going on. Just was, thinking about him and meant to ask earlier. So, Saturday night.
It is.
It's a good night. It's been a good day. It's been a pretty good week. So, just thankful for that. Thankful to see y'all. Tonight, shockingly, we're going to talk about the economy and the markets,
Nuh-uh.
offering it offering information that prudent, thoughtful investors, want to know and actually use in making their decisions. So we'll talk about.
Go ahead.
Did you want?
Well, yeah,
I
but
thought you were going to say
not
something.
related to that. I was. That's sort of my. I gotta say something, but go ahead.
Just we'll talk about some of the things that motivate investors, interpretations of the information, the philosophy of investing generated by understanding the consequences of actions resulting from ideas, the interpretations of data. So, you'll see people in finance and investments and markets.
You got to give me a minute to say something after you finish that sentence.
I did 30 seconds ago.
Well,
Go ahead.
I was letting you finish that sentence. Sorry. No, if I'm a little testy tonight, I just got through watching 3 hours of Dave Smith versus Chris Cuomo. It was a lot to take in. And if you guys have read the book, please, if you are reading it, what's it called again? Oh, sorry, it's Beast. Help me, Clay. Naomi Wolf, defeating the beat. No, I'm dying here, Clay. You don't
Beauty
know,
and the Beast.
huh?
Beauty and the Beast.
Clay, this is sad.
The Eye of the Beast.
No.
Wait, that was Eye of the Tiger.
Oh my God, I've got to look at my Audible. I always get.
All right. While Ellen is fumbling around with that,
wait. Takes me 1 second. Facing the Beast. My God. It is a lot of what Chris and Dave were arguing about had a lot to do with the book. So if you are reading the book, I don't know if y'all like it. I don't know if you hate it. Clay was like, next time, don't choose something so freaking weird. But it is a lot of good information when you get into it. The first couple of chapters are a little depressing, but
whiny.
Stop it. But book club is on. I'm going to get this wrong too.
Wednesday night.
The 5th.
Yes, this coming Wednesday.
Yes. So
at 7 p.m. So
yes,
if you don't have the book, if you haven't read the book, grab it, read it, join us, gab it, talk, throw out your ideas.
If you go to Substack, Naomi Wolf's Substack, most of the book is in her Substack. Just even if you just kind of want to get an idea, because if you don't want to purchase it, or I mean, I kind of got it free off Audible because I haven't been on Audible, so I got a free one. So y'all let us know. Y'all better be there, or we're gonna stop doing this.
Well, it. How do I want to say this? It's an interesting book because it's current. It's got a fair amount of, there's some philosophy underlying it, which I don't know if most people appreciate or enjoy. That's kind of what I do. The first few chapters are kind of whiny. I'm not a big whiny fan in reading, but it's a different book. It won the vote, and we are going to have some fun with it Wednesday night. So join us.
I think it'll be a cool conversation.
Yeah. And y'all know Ellen feels things rather strongly.
I feel the feels.
Yeah, she can be modestly intense and feisty about some things. Her greatest strength or greatest weakness. But and this is some things she feels strongly about. So
actually,
join on in.
Carson. Actually, I hadn't read it at all. It was just recommended to me by a friend, and I was like, she's like, it's really good. And I was like, okay. And I hadn't read any of it before I suggested it. It was just kind of a out of nowhere thing. Carson.
Good to see you, Carson. How you doing, man?
Yeah, we are sort of professional.
It's, both of us, I think, are probably a little slow. Just ate dinner, and probably both of us ate too much. So it's affecting my brain a little bit, but damn good to see you, Carson. Hope everything's going well for you.
Like, Trick, what's up? Yes, y'all are funny. Y'all crack me up. Melissa.
Yeah, my nickname in high school was Trick Baby.
Wow.
When I was dunking the ball.
Did you miss a lot or what?
No.
Oh, okay.
Never missed.
What did we eat? Clay made dinner tonight. Clay made, it was a fried chicken. Was it a breast?
Yeah, a sliced breast, breaded, fried with kind of a chicken parmesan, with some tomato sauce and a few different kinds of cheeses. So just saw somebody making it, thought, I can do that. That looks pretty good. Thought I'd give it a shot. And the best way to learn what you are not good at or don't do right is to actually do it. So I learned I'm not good at slicing chicken breast in half. There is an art to getting them equal, which I have not yet mastered.
No, he's doing a good job. I mean, he's, honestly, I was like, we sit down to eat and I was like, Clay, are you going to drop a bomb on me or something? Like, what's going on? He's like, what do you mean? I was like, well, normally you don't cook dinner for us. So I'm like, I'm waiting for this shoe to drop. Like, what's going on? No, but he did a good job.
It's fun. I like cooking.
Yeah.
And it allows me to be a little creative, fiddle around and experiment with some things I already figured out, and, ask Ellen what some things I could do different next time. So always looking to kind of improve.
Hey, Carson.
Now,
catch up to what's going on. And GB is on his way for leftovers. Come on, little buddy. But you gotta wash that sniffer first.
Yeah.
Sniff not quick.
So welcome everyone to the channel. Ultimately, is a channel about understanding, interpreting information, developing intuition, of evaluating the reality we're caught up in. So welcome to Moffat on Money. The goal is to try to improve your abilities as a potential investor, as simply someone struggling to get by, or
someone spends money ever.
Someone who wants to understand markets and policies. We, kind of enjoy the whole gamut of those issues. And that's kind of the things, I was thinking today, really, I guess I'm a little bit more philosophical in that I was thinking really what is the channel's purpose and all. So That's kind of in a nutshell how I would describe it. Now, tonight we're going to kind of gab about some topics, kind of a mishmash maybe, that are relevant, such as the news that Walgreens, Target, Walmart, others have all announced price cuts in their retail items the past month or two. Now, I've seen some articles and people hailing this, the administration hailing this as a result of their successful economic policies. Some people saying, this is a result of the strong economy.
Okay.
But there is a greater reality, a far greater reality. First of all, Jane.
Oh, you saw that? Okay. I put it up
Yeah,
there.
Mr. Carolyn loves chicken. He'd be happy to trot down there and take that off your hands. We need to just have a cookover for Green Bean and Mr. Carolyn.
I still want the bread bake-off.
That too.
Mhm.
So we will do something in the future. Can't do anything quick. My book is rather full right now, but hopefully sometime in the not too distant future. So, cutting prices. Is the economy booming? Do retailers cut prices when the economy's doing well? Think about that for a second.
Of course they do. Prices are inflation. Wait, inflation's going down. The prices are coming down.
All is well.
Good.
All is well.
Mm-hmm.
Bottom line, when retailers have a lot of their product walking out the door, when demand is high for a product or goods or the items that they sell, they don't cut prices. That's when they increase prices. Think about it. If you own a store,
Clay, they're just reacting to the reduced inflation. That's all.
Yeah, we're going to get to that. Just think about it. If you own a store and inventory is flowing out your door, you have a hard time keeping stuff stocked, are you going to cut prices? No. Supply and demand is still a law. If you've got demand for a product or good increasing, supply is limited or constrained, that price is going up. As demand increases, supply doesn't, prices rise. You see this occurring in natural disasters all the time. The price of water soars during a crisis. During Florence, during Katrina, the price of water soars.
Mm-hmm.
Some people call it gouging and think that's a bad thing. I don't. I think the price soaring is actually a good thing. Now, why would I think it's a good thing? Any guesses?
I missed the question. I was doing what was it again? Repeat that, please.
Price gouging. During a crisis like a hurricane, price of water soars.
Right.
Greatly increases.
Right.
I think that's a good thing. Why?
Because you like screwing people over that need stuff?
Actually, it's the best way. It's the best way to see that people don't get screwed over. As the price increases,
mm-hmm.
For example, if the price was cheap, but there still was a limited supply, people would buy excess water and hoard it. They would try to stock up for their family, for their personal use, whatever. If it was real cheap, they'd be using it to bathe and do whatever. Meanwhile, because the supply was limited, there were people that couldn't get water. So by raising the price, it cuts the excess demand. People will only buy it for the essential, to drink.
Only if they need it.
Only if they need it. Secondly, that higher price serves as an incentive to others to increase the supply of water, to go to measures over and above to increase the supply of water. I remember during Katrina when New Orleans was hammered, and of course, most of the city is below sea level. And so all of its, freshwater lakes were flooded with salt water. The pumps were shorted out, et cetera, et cetera. No fresh water. And the price of water soared. Well, there was this little tenant farmer up in middle of Mississippi who saw that water was going for $10, $15 a bottle. And so he has an old beater, old car.
Mm-hmm.
He takes and he pawns everything he can, puts everything he has at risk. He goes and buys cases of water, fills his car up, takes them down to New Orleans, and he's selling them out of his car for $10 a bottle.
Right.
He cleans out his car, drives back up to Mississippi, buys more water, goes back. He does that a number of times. So what has happened is he has taken a great risk, his car breaking down, nobody buying the water, etc. He's taken a great risk and he's increased the supply. He made water available to people that it otherwise would not have been available to.
Okay.
And I think that's a great thing.
Mm-hmm.
That's why the higher price when there's a severe shortage is actually a good thing. It limits waste, it limits hoarding, and it increases the supply. What could be better for those people that don't have the product? If you keep the price cheap, it's all gone. People will go in there and buy it up to ensure that they're covered for the next couple of weeks.
I get that, but at the same time, you're kind of price gouging the people that, especially like in a hurricane, that really actually do need the water, that can't afford it.
Well, the best way to get people
can't get cash out of the ATM because the electricity is off, and I'm just saying.
Yeah, but if they can't get cash, they can't pay $2 a bottle any more than they can pay 10. And the main thing is trying to control the supply, the demand for the limited supply.
I get it in a finance level. I'm talking about.
It's a reality level. It's not theoretical. It's actual reality. If the price stays extremely low, the available supply will be vaporized by a few people if they can't raise the price and control the demand. So that's why I support it. It actually makes more supply available to those who need it the most. Boom. Now, so if your goods are just flowing out of your store, consider the opposite. You have no sales. You've got inventory sitting there on your shelf rotting. It's not moving. You have bills. You still have bills. You have rent. You have phone, other utilities. You've got employee salaries. You've got your own salary. You've got payments for the inventory that you owe. What do you do? Well, that's when you cut prices. You've got to get some cash flow coming in. You've got to have some cash flow to pay your bills. You start laying off staff.
And if you're borrowing money for that inventory for whatever reason, and you can't pay that back, you're just building up interest on that.
Well, not only that, but they may seize your business. They may come in and seize your collateral. So then you have nothing but the bills. So when a company is not selling product, they lay off staff, they try to cut expenses, they lose unwanted rental space, and they reduce their inventory expense by cutting prices and paying off the suppliers, or at least trying to. So these stores and others have been hit hard, very hard, by the economic pressures of inflation and the high interest rates. They all have been experiencing declining sales. Target just announced its first quarter, second quarter, anyway, its quarterly financial results, and their sales were down significantly. After that, they announced price cuts. Bingo. Now, some of these stores are reporting sales, and you look, their sales are only down, 4%, 7%. Okay, maybe that's not a big deal. Well, actually, because prices have increased 20% over the past few years, they're moving a lot less product, and they're having to sell it for a tighter margin.
And a lot of them
That's the problem. Go ahead.
A lot of them work, like Walmart works on 2 to 3% margin. I don't know about Target and the rest of them, just because I used to work with Walmart in selling them things, but and then decided not to because it was just too much of a headache. But and it also depends on if they're going on LIFO or FIFO, what they paid for it versus when it goes in or out.
Yeah, it's really not so much of the accounting mysticisms. It's more about just the cash flow. They got to generate cash flow to pay the bills. You can have an accounting profit, but you have a poor cash flow. You still can't pay your bills, even though accounting wise, because you've increased the expenses. Decrease the expenses, it shows as a larger profit. When the reality is there's no cash flow.
First in, first out versus last in, first out makes a huge difference when the prices go up.
But the companies aren't looking at that when they decide to cut the prices.
True, but it's just a part of the...
They only look at that when they're paying taxes.
What? No. I'm sorry. I was VP of a manufacturing company. This was very important in how we price things.
I was CFO of a company.
Great.
Rather large company, but anyway.
Experiences, apparently.
The practical reality is these companies are reporting losses and are cutting prices, reporting declining sales. Now, some of these firms have made strategic mistakes. They tried to expand during COVID, for example, when money was cheap and easy and available. Now that it's not, they're shuttering stores or even filing bankruptcy. Consumers are changing their spending habits as well. Sometimes I'll get emails from people who watch the show, and they've talked about they've had to give up certain expenses. They've had to change, their buying habits. That's not uncommon. It's far more common than what you'll read about in the media. So we're in a phase of an economic decline where stores are having to dump their inventory. Walgreens, for example, is cutting prices on 1,300 items. The chain has actually been reducing prices since October and reported a loss of $6 billion last quarter. Target, after announcing disappointing sales, which I already mentioned, they were down, over 3%, losing ground primarily in groceries and household items. They announced cuts on 5,000 items. Amazon is discounting 4,000 items. The slowdown is hitting online retailers as well. I think Jane alluded to that a little earlier. The well-known Walmart is always been seen as a recession haven because during recessions, their business usually picks up with more people utilizing their services, buying their stuff from Walmart. Well, it's cutting prices on 7,000 products, along with Aldi, a discount grocer. So what does this tell you? It tells you that all of these are losing sales.
Hang on. We got some comments here.
Jane, I'm cringing at what the P&L must look like. Yeah, they're
Yeah.
hurting. Carson, I'm agreeing with Clay on this one. Welcome to the club, man. Took you long enough.
Hey, that's what I'm saying though.
Living in Canada, we see this all the time with the exchange rate. Excuse me for a second.
Well, that's Carson. You're proving my point. As soon as
Somebody's at the door. Excuse me for a second. I'm sorry.
you're okay, go ahead. Carson, you're proving my point though. Living in you see that all the time with exchange rate. As soon as the rate goes bad for companies, they jack prices up but are slow to drop them. They are probably first in, first out, which is, I'm sure a lot of you know this, but when you have a company, the first thing that you get in, or the LIFO, the last product you got in was the first one that goes out. What was going on?
Somebody was at the door.
Who was it?
Neighbor.
Oh.
Carson, living in Canada, we see this all the time with the exchange rate. As soon as the rate goes bad for us, companies jack up prices but are slow to drop them. Yeah, we see this in gas. You know, as the oil price increases, gas will increase right along with it. Then once oil price starts dropping, the gasoline prices are slower to drop. They're sticky. Fancy term that economists have for the slow drop in prices once the cost of raw goods starts dropping. Input starts dropping. Sticky, kind of a technical word there, but I like it. And, you know, people are reluctant to give up an opportunity for a little bit wider margin than what they normally experience. So that is not uncommon, but it is the competition that ultimately lowers those prices back down.
And when you get the product and what you paid for it depends on what you're going to sell it for. Just because the price went down today by half doesn't mean that you can still sell what you have at that price. That was my point.
I missed something, but I'll allow it.
No, I'm saying you're talking about gas, right? Let's say I bought it at $100 a barrel, right? I still have the $100 a barrel in my warehouse. I'm just using, it could be a widget, right? And the price drops to 50. I still have to make up for the $100 that I purchased the ones that I have in my warehouse for.
Yeah, but you can't sell that barrel at $100. You have to sell it at 50. You just have to eat it.
No,
nobody's going to pay you $100 for that barrel if they can get it 50 right next door.
I'm talking about the slowdown of bringing the cost down, like with fuel. Sometimes it takes a minute because nobody's going to take a loss on 100 barrels of fuel.
Yes, it's sticky.
Or 100 gallon, huh? Okay, whatever. You and I disagree on this, that's fine. Maybe we were in different businesses, obviously, but okay.
We're not disagreeing.
Comments in 3, 2, 1. No, I would never do that, Carson. I don't care if you disagree with me. I have a right to speak my piece.
Don't irritate her. That's my job.
Yeah, no kidding.
You know, the good news is we can irritate each other and still not kill each other. So
that is exactly
today's climate. Huh?
I was going to say, he better not say we can still like each other. I was thinking we can still not kill each other.
Yeah.
My thoughts exactly.
Now, looking at the rising cost hitting retail stores and the impact just in 2024, not going back to 2023, just 2024. Here's the impact on some of the better known names. Applebee's. Applebee's is closing over 30 stores this year. You're going to have to drive farther to find that neighborhood Applebee's. How about Best Buy? Well, after closing 24 stores last year, it plans to close 15 more. The Body Shop. Any of y'all ever shop at the Body Shop? I remember that being a kind of a hot place decades ago.
A long time ago. Yeah.
Yeah, I didn't even know it was still around, honestly.
There's
But
one at Mayfair, I think.
do what?
There's one at Mayfair, I think.
Well, it is, as of March 1st, it's closing all of its U.S. stores. It still has some in Canada, but is continuing to close those. CVS, yeah.
Before you get there, do you think that has anything to do with people wanting more healthy products for their body or cheaper? Because Body Shop is expensive.
Don't know. All I know is that they are one of hundreds of retailers that are crashing, closing, going bankrupt, doing liquidations, dumping inventory, etc. You don't get that kind of thing when the economy is going good. CVS, pharmacies are having a hell of a time right now. The company, since 21, has closed 900 stores.
CVS?
Yeah. Recently, it announced it was closing all of its pharmacies in Targets.
Good.
Dollar Tree, which also owns Family Dollars, closed 1,000 stores.
Clay, can you? Clay and I were going. Last time we were in Lincoln to see my grandfather. Clay was amazed. Do you remember this at all? About the dollar stores?
Oh, there was one corner that had all three of them. Dollar store. I mean, had Dollar Store,
Tree,
had,
the Dollar General, Dollar Store, Dollar Tree, Dollar General.
General, yeah.
Mm-hmm.
Just right next, just 30 feet from each other. And I'm like, damn.
Well,
that just doesn't seem to be too smart.
It is a very poor county that he lives in, and it, you know.
Yeah, but space them out a little bit.
You should space Walmarts out more. There are more Walmarts, I swear, per square mile in that part of North Carolina than I have ever seen. I told my grandfather, I was laughing. I said, we have two, and they're about 15 miles apart. You can go 3 miles, Walmart. Another 3 miles, Walmart. Yeah. It's crazy.
Well, not to leave Walmart out of the equation, they're closing 9 to 12 superstores this year.
Really?
Which is kind of shocking because, like I said, they normally fare well during, economic slowdowns, recessions. Mm-hmm. Macy's, well-known retailer, is closing 150 stores over the next couple of years. Outback. Outback. Yeah, it's closing over 40 stores. And then there's additional stores it also owns, like Carrabba's, Fleming's, Wine Bar. So there'll be additional closing in those. Most of us are familiar or have seen where Red Lobster is filed for bankruptcy, closing. First it announced it was closing 48 stores, decided that's not enough. So they filed for bankruptcy 2 weeks ago.
Okay, some people will say it's because no one wants to work. What do you say about that?
I think they have trouble getting labor, but that's not the attribution. All these companies are listing declining retail sales. I'm sitting there thinking about it. If you go into a retailer that has had difficulties, they've laid off staff. And I've wandered around some of these department stores trying to find somebody to check me out. I almost stood up to the register and checked myself out. But
Walmart,
that's a problem.
Walmart's going to start charging for that.
Yeah, they went to self-checkout.
You have to pay $98 a year to self-checkout.
Yeah, no, thank you.
Because everybody's doing it and they're having so much theft. that the shrink is just ridiculous, and that now they want to charge people to do it.
Yeah. It's like banks charging you to deposit money in their bank. Oh, hell no. Not doing it.
Hang on, we're going back to this one.
Yeah, the body shop always sounds like it sells something else. I will say that I always liked the name The Body Shop. I always just thought that was kind of a cool name, but it's a topic for a different night. Carson, I think y'all were just saying the same thing differently. It wouldn't be the first time, won't be the last time.
We have that. We're arguing about something, and one of us is going to go, we're saying the same thing. We're just not saying it the same way.
Jane, I agree. I wouldn't shop at the Body Shop, and it's too much perfume and bad ingredients. I was thinking the Body Shop at first was a clothing store, but now I remember it's got all the soaps and perfumes and stinky stuff.
The one you're thinking about is that trashy store that sells all the bodycon, whatever clothing that is super tight and super revealing.
Is it? I just remember it from, I thought, like in the 80s. I thought it was
Yeah,
popular then. I don't know.
yeah, yeah. Well, Body Shop was too, but you're thinking of something else. Is that one of those rumors? Which topic? Carsonian?
So you get
We, it happens
probably
on.
won't be the last. Yeah. So you get the idea. There's a lot of other stores that have announced Foot Locker, Express, Rite Aid,
No,
Walgreens, Party City. Foot Locker. I
hang
always
on, I'll
liked
find the
Foot
part.
Locker. They were hard. It's hard to find a decent tennis shoe store. You go into some of these, big sporting goods stores, and they only have, maybe two or three or four different designs or manufacturers of the type shoe you want. It's hard to find without a superstore. So I would have thought, some of these would have done well, still done okay.
I'm looking,
But the
Carson.
price cutting is ultimately a testament to the policies in place, the results those policies are generating. And it's not because the economy is getting stronger. There's a reason why Warren Buffett is hoarding 183 billion in cash, his largest position in history. I just saw where, we talk about, stuff going on in the economy. Just saw where Fannie Mae issued their quarterly report, and buried in it are mortgage delinquencies by loan type. Here, the blue line is FHAs, and you can see here's the COVID era, and then you notice the past year since 2023, the rate has been steadily increasing, and it's actually up to about 2010 highs. Now, you're probably asking, FHA mortgages, what kind of loans are that? The common name for them is subprime.
Hang on, before you get into that, can I share this real quick?
Sure.
I need you to, okay, let's remove that. So technically, what they are doing, um, if you are where was it? Checkout, changes in available checkouts. This is self-checkout. It's for Spark shoppers and Walmart Scan and Go only. The Scan and Go is the one that charges I'm looking. It depends on the store. Am I going too fast? Crime and theft is really impacting the retail industry. Sizable losses are shrinkage.
Yeah, but where'd you get the $98 a year from?
That is their subscription.
Yeah, where is that? Is what he's asking.
Come on. It is the Scan and Go. It is a subscription. Hang on. That, and I just freaking saw it. It's right here. I'd have to redo it to share.
So we'll have
Y'all hear the
CTT.
audio?
Delivery. I mean, same day delivery. That's a pretty big deal.
Very big deal. I mean, it could be 10.
I'm looking for Walmart.
Welcome back this morning.
Y'all hear that?
Consumer retail rewards
Yes.
and programs. Target just announced it's launching a new paid membership program next month to compete with giants like Amazon and Walmart. So what does it cost? What do you get? And how does it compare to its rivals? NBC's business correspondent Brian Chung has been looking into this. Brian, good morning.
Good morning.
So we've heard about other big retailers doing this. We're going to compare in a moment. But tell us what the new paid program at Target is all about.
Yeah, it seems like every retailer has a subscription service now. So let's break down what the announcement was. Target saying yesterday they're going to have this new program called Circle 360. It launches on April 7th, so it's not yet active today. And the intro.
You got to love Walmart using Target's symbol to
I know, right?
market their new program. But it's a subscription service, much like Amazon Prime. So you'll get certain benefits for it. They're not actually going to charge you to use the self-checkout.
No. Here we go.
Yeah, it's a subscription service.
But pay ship too.
Yeah, they do. So this one is going to be similar pricing to Target once that promotional period is over. So it's $98 a year, $12.95 a month. Very similar as well. You're going to get free shipping. In some cases, you're also going to get free same-day shipping as well, depending on what you're buying. Grocery delivery over $35 as well. But Walmart has a few bells and whistles in addition to just the shopping as well. You have a Paramount Plus subscription, and you have a discount
part
on
of
gas,
this,
which is a very unique thing, right? There's no gas stations at Amazon and Target, so that's very much notable for those that are subscribed to Walmart Plus as well.
It wouldn't make sense to join all three.
So it is a limited area, but you will have to pay. Walmart Plus. CJ knows what I'm talking about. Yep.
Yeah.
Paying. I'm not. No, not going to happen.
Yeah, I don't think anybody is.
I mean, the only thing we do pay for Prime, just because it's so much cheaper for shipping.
Yeah, and you get, the TV service thrown in. So
yeah.
But yeah, I just don't think anybody's going to pay to have the privilege to check themselves out. Now back to Fannie Mae's. We talked about Fannie Mae's are, basically a subprime loan. And think about that. Delinquencies are rising. Anybody shocked about that? Delinquencies are rising to a level not seen since 2010.
Nice.
So basically, we learned nothing from 2008. We learned nothing. And what's my rule number 2?
It's on the back of the hat. Stupid should hurt.
Stupid should hurt. So there's some problems out there. You look at the war on the dollar. The war on the dollar as the reserve currency continues. This week, Saudi Arabia told the U.S. that the agreement that has been in place for 70 years for them to sell their oil in dollars, well, it comes up for renewal next month. It will not be renewed. They are not going to renew it. Now, a lot of people ask, what does this de-dollarization do to me? What happens if oil and other major commodities are no longer priced in the dollar? Bottom line, it will increase inflation and interest rates. Think about it. You buy foreign goods, food. Like in the winter, a lot of the food we buy is foreign, imported from Argentina, Chile, other countries. Wheat from all over, soybeans, et cetera, et cetera. Well, if the dollar gets weaker, what that means is it takes more dollars to buy the same amount of goods and services. That's inflation.
Hang
So
on.
these products and services cost more.
And depending upon the exchange rate for whatever currency we have to purchase it in, if our exchange rate is really, if it's high or low, which one is the worst for us? The low, high.
It depends on what you describe as worse. They both can have problems.
If
But
we
now
have
we're talking
more
about the dollar
dollars
weakening.
for the exchange rate that we have to purchase the product in.
Yeah, it costs more dollars.
Yeah, but depending upon the exchange rate for the actual whatever we have to purchase it in, that makes a difference.
Well, this is the exchange rate, dollars for the other goods and services. That's the exchange rate. That's what I'm talking about.
We're saying the same thing, just differently again.
Yeah. So, you know, if it's like the euro, you buy €1 worth of goods for, let's just say, $1. Well, if the dollar weakens, you have to pay $2 for that same euro. That's inflation. So a weak, and remember this, a weakening dollar, a dollar that people don't want, a dollar that's less in demand, generates inflation. It also causes interest rates to increase because the U.S. government is selling a ton of debt. And foreign buyers buy a lot of that debt. Well, if the dollar weakens, they are going to want a higher, they just simply won't buy as much of that debt. So the interest rate that the government pays has to increase to attract more foreign money. Interest rates rise, particularly when the government is borrowing so much money. So this is no secret. It's not complex math. You can kind of think through it if you take a second. So you have to wonder, is it actually the goal of those in power to weaken the dollar? If so, to what end? Why would they want the dollar weakened? Well, there's some clues as far as to whether or not it's intentional. Gerard Bernstein, probably a lot of you may not be familiar with that name. Gerard Bernstein. He is the chief economic advisor to President Biden. Well, he wrote an op-ed in the New York Times titled "Dethrone King Dollar." Gerard Bernstein, his own opinion. He argued that having a strong dollar is a burden, causes increase in asset bubbles. He just lists a whole litany of economic ills, and he obviously attributes them all to the strong currency that's in demand by others. And none of the problems he attributes to policies, which I guess policies, ideas are just irrelevant now, right? He also argues there is no reason why it should persistently, his word, persistently increase. He just simply omits or forgoes the opportunity to explain why it wouldn't, but it makes a nice soundbite. Now, for those who are not familiar or intimate with Mr. Bernstein, I identified him as Biden's chief economic advisor. Well, he received a bachelor's in music from the Manhattan School of Music. He has a master's in social work from Hunter College. And he has a doctorate in social work from Columbia. He has 0 academic publications in economics or finance. He has a couple of warm, fuzzy books that strike all the right chords for progressive, properly bemoans poverty, but offers no solution, just more of the same bad policies that have increased poverty over the past 40 years. He's best known, his reputation, the thing he is best known is for using acronyms like WIT, W-I-T-T. We're in this all together. That kind of sums up his modest intellectual prowess rather well. Remember when he we showed this video of him a few weeks ago of him explaining, or rather his confusion, on how the supply of money is related to inflation and borrowing. He couldn't even work through a simple example of that. Why? Because he has practically no real economics understanding. I am firmly convinced that somebody that has watched this show for a year has a better understanding of economics than he does. And this is the guy shaping our policy. So if you wonder if the devaluing of the currency is intentional, I offer this as evidence that it is not intentional. It is the fruits of stupid ideology. You look at things related to the de-dollarization and international trade. Just saw this week where China is imposing export controls on aviation equipment, technology, and software. So far, nothing on lithium and rare earth materials or pharmaceuticals, which we import a ton of those three. Apparently, they strive to maintain full employment for the Uyghur and Christian slaves that do the mining. But this is kind of what a trade war will look like. Now, this will hurt China in the long run. As exports drop, investment in China will recede, continue to drop. We talked a few months ago about how China was intentionally pursuing policies to hurt their economy, to hurt the domestic economy. Why? Why would a government want a bad economy? Well, we went through this kind of step by step, and bottom line, shucking it down to the cob, is that it gives them greater political power. It makes the people even more dependent on the handouts from government. And when people are receiving free things from the government, they generally are far less critical of the government. So, is hurting the economy actually a plan by those who want more power? You tell me. Dethrone King Dollar. Having a weaker dollar, again, will increase inflation and increase interest rates. Now, some other, interesting things as far as the economy, trying to judge, where we are in the economy. Study from the San Francisco Fed shows that households have now exhausted their excess savings. What are excess savings? Well, excess savings are the difference between actual savings and the pre-COVID trend. Now, COVID is kind of thrown out because there was so much saved due to the stimulus and that kind of thing. But how does the individual savings rate compare to the pre-COVID levels? Well, here's a picture of how it compares. You had the COVID stimulus, and then since then, particularly when inflation started kicking in, people have started reducing their savings greatly. If you look at it on a cumulative level, you see the bump that savings experienced during the COVID pandemic with the stimulus, $2.1 trillion. Well, now as of March 24, it was minus 72 billion. So people have eaten up through their savings and are now eating up their basic savings, if that makes sense. And this is as of March. We're 2 months beyond that. So this has only increased over that time. Kind of interesting. You know, how would you describe this? I would say people are broke. Here is the U.S. personal savings rate, which, you know, as of March, dropped down to 3.2%. And you can see the average historically is probably going to be somewhere around 5%. So people are able to save less and less, particularly the poor and the middle class are at 0 or lower. People are broke. They're getting hammered. So what does all this mean? Well, consumers have been spending their savings. We've also seen where 401k withdrawals, pre-retirement withdrawals are at an all-time high. So people are rating their retirement plans. Their credit cards are record utilization rates. So all of this has kind of helped keep retail sales up a little bit. And you go, wait a minute, I thought you said they were declining. Well, people have bought stuff. It's higher priced, so they buy lower volumes, but they still have been buying stuff. Well, they're using their savings, they're using their retirement accounts, they're using their credit cards. What happens when they have exhausted all three of those? You know, these kind of trends are bad for the economy. They are bad for the employed. They are bad for those with part-time jobs, those who have them, those who will need them. It's bad for consumers who may see a temporary decline in the inflation rate. You know, as these retailers are cutting prices, you may see a temporary decline in the inflation rate, but just realize once that inventory is dumped, those price cuts will come to a quick end, and you will pay more for it after the excess inventory is sold. You know, if companies are going to sell items at a loss, they'll be out of business before long. They're closing stores, they're laying off people. You know, we're not done with this mess yet. You know, I've said repeatedly that the banking crisis, you know, looking at another area of the economy, we talked about, you know, the economy is, by a number of indications, not doing well. Well, I've said that the banking crisis has been delayed, not avoided, not solved. You know, further testimony of that was offered up this week by the FDIC, who in their quarterly summary report released this chart of the number of problem banks. Now, they calculate certain ratios. We won't go into that, with 1 being the best and 4 and 5 the worst, looking at their liquidity, their operations, their managerial strengths or weaknesses, whatever they have. It's called a camel ratio. Well, the number of problem banks has started increasing. You remember in March of 22, when SVB and First Republic failed, several large banks failed. Well, the Fed instituted a new facility to lend kind of emergency cash to banks to stabilize, keep any more from failing. And they renewed that for 1 year. It was originally a 1-year program, and you could renew it for 1 year. So they honored the renewals. Well, even with that, you'll see the assets of problem banks is increasing, and the number of problem banks increased this past quarter from 52 to 63. Now, as they experience more problems, you're going to have depositors withdrawing their money. And a bank really doesn't keep much cash in its drawers or in its vault. So if depositors start withdrawing money, the bank has to sell assets. A bank can either, when you deposit your money, the bank takes that and they either make a loan or they buy a security like a treasury bond or agency bond. So they have either mortgages or securities, bonds. Well, as bonds, and we've talked about this before, bond price interest rates are like a teeter-totter. As interest rates rise, that bond price drops. So the values, the market values of the bonds that banks are holding as investments has declined and declined sharply since rates have spiked. And this shows the value of those investments going back to 2008. You can tell there were some losses in 2008, 2009. Well, values increased, things leveled out, had a brief liquidity issue 2017, 2018 when the Fed started hiking rates again under Trump because they were concerned the economy was growing too fast. Well, COVID hit, they dropped rates. Everything's fine with the bank assets. Well, now they've started hiking rates again. And you see that the bank losses, unrealized losses, because they still own these securities. So they haven't sold them. These are just the market values compared to their purchase price. So they've got steep losses in their investment portfolio called unrealized losses. Well, when they need to raise cash, they can't, tell people just to pay off their mortgages because they need the money and give them 24 hours. No, they have to sell their investments to raise cash. And that's when they realize the losses. That's when they have to take that loss and write it off against their capital, their reserves. That's when severe problems arise. So when banks have to start converting unrealized losses to realized losses, you're going to see a lot of banks collapsing quickly. And that will cause problems for other banks. That's one reason why the Federal Reserve has been so hesitant to hike rates further, even though inflation is still high and even has ticked upwards the last 4 or 5 months. Because of this, what you're looking at right here, this is a huge, huge problem for banks, particularly small and regional banks. Once they start having to dump some of these securities to raise cash to meet depositor requests for their money, you're going to see failures increase, and that will cause failures and problems and write-offs. I should say write-offs, problems, and failures with other banks. It just will devastate many small and regional banks. Anybody have any questions so far? Does that make sense? Hello, Dave. Thank you, sir. Appreciate the support. Good to have you. And anybody that has any questions, please feel free to throw them out. If I say something that doesn't make sense, let me know. Welcome to the family, Dave. We have a truly great little group, and appreciate you joining. Now, I saw something else kind of on this same line of thought. In this site, the guy's saying, to me, an interesting thought. Moving from 0% interest rates in 2020 to 5% today is more painful than going from 6% rates in the 70s to 20% rates in 82. That's interesting. And, underneath you've got people disagreeing, whatever. But he's right. The impact economically is far greater. Let's play with the math a little bit. Let's say you have a $100 million loan, which for corporate America is not uncommon. At the rate of 0.1%, 0.1%, which was the basic Fed funds rate in 2020, the annual cost is $10,000 in interest a year on that $100 million loan. Now, if it goes up to 5.5%, that cost goes up to $5.5 million. That's an increase of 500 times. So if you're a corporation with a $100 million loan and interest has increased 500 times, you're hurt. There's a reason why it's killing what we call zombie companies. Zombie companies, there's a lot of different definition for zombies. Kind of the standard definition I use is a company whose operating profits are barely enough to pay its interest expense. So you take all of its sales, subtract out all the manufacturing cost, all the selling and administrative cost, the actual expenses it takes to manufacture that product. That's your operating margin, your operating profit. So their interest expense just about eats all of that up. For example, in 1983, the interest rates went from 6% to 20%. Can you imagine if interest rates were 20% now?
It was in the 80s.
Yeah, it was in the 80s. And that would take the interest expense on that $100 million loan from $6 million to $20 million. That's a factor of 3.3 times. Now, that is uber painful, but it's not as painful as a 500% increase, particularly when you're used to that nearly 0% rate for 10 or 15 years. It's why corporations borrowed so much money, why leverage increased, because money was cheap. It was extremely cheap. That's why you have so many more leverage companies now than you did back in 2010 when the Fed started the QE, quantitative easing program, where they forced interest rates down so low. Now, many highly leveraged firms are barely able to pay their interest expense. They are true zombies. And here's a little graph showing the number of zombies. Now, there's two different definitions here. The bars are what we call strictly defined zombies, and then loosely defined zombies. Like I say, there's a lot of different interpretations. The difference here is how you calculate their operating income, how strict you are in terms of that versus their interest expense, looking at it over different periods. This is kind of an approximation. This would be following very strict requirements. Either way you go, you see a huge trend, increasing trend from 2000 through 2023. Zombies. That's a big problem, particularly as interest rates rise. Years of zero interest rates, have given rise to a new crop of these zombies. The problem with zombies is not just the risk they have for their employees of the company going bankrupt, but if you think about it, zombie firms care only about their survival. They don't care anything about adding economic value to the shareholders, to the employees. They have no room for growth, new investment, for research, for innovation. As long as they can refinance their debt, they exist. But cue up the end of the free money buffet, and suddenly, these zombies are finished. They're done. I would hate it for the employees, but as far as the overall economy and helping people focus their eyes on what they should be focused on, there's some cleansing that needs to be done in the economy. So another area in the economy that indicates to me that the economy is not booming. It is not healthy. I talked about Warren Buffett, how he has 180 some odd billion in cash. You look at Bill Gates, Jamie Dimon, they've been selling stock. Zuckerberg, been selling tons of their stock the past few months. Now, Jamie Dimon is the CEO of JP Morgan Chase. He dumped about $183 million of his stock over the past few months. And you wonder why? I mean, at least I do. Kind of wonder why. Well, he was at a conference speaking, and he was quoted as saying, there could be hell to pay concerning private credit. Now, what's private credit? Private credit is just a negotiated loan between a borrower and a non-bank institution or individual. So you could have an individual like, Warren Buffett making a loan, billion-dollar loan to a large corporation. It's private lending, private credit. Well, Dimon was talking about, commenting on the explosion we've seen in private credit. And he said, quote, I've seen a couple of these deals that were rated by a ratings agency, and I have to confess, it shocked me that they got rated. So it reminds me a little bit of mortgages. Dimon's talking about the subprime crisis, when you had the rating agencies taking absolute garbage and giving it a AAA rating. So banks bought this AAA rated garbage, not knowing it was garbage. That garbage ended up blowing up and folding. And so the banks had to take the losses, and the rest is history. Well, Dimon is sitting here indicating that he sees some of the same stuff repeating. And he backed it up by, to me, the biggest action he could take, selling his stock, $183 million worth. Now, in his tax bracket, he'll probably pay 30% of that in taxes. So $60 million in taxes. What kind of loss do you have to expect to where you'd rather take a 30% tax loss on your stock versus keeping it in the market? I mean, at least that's the thoughts that come to me. Y'all might have a different perspective or opinion. There's probably, investment managers out there that do, but it gives me pause. The idea is that the lender wants a high rating. because they'll do the same things that the mortgage companies did when they were making loans to people that they knew couldn't pay them back. They sold them to like Fannie Mae, Freddie Mac, et cetera, who packaged them, took all these mortgages, put them in a trust, and then sold rights to the trust. This was the AAA rated security. And of course, all the mortgages in the trust were garbage. Very, very low credit ratings, poor collateral, high chance of bankruptcy or default. And yet it got a AAA rating. It doesn't matter whether you have one garbage mortgage or 9,000 garbage mortgages out of a 10,000 mortgage pool of mortgages. You've still got trash. You still own trash. And that's what's going on today. That's what Diamond says he sees going on in the private credit markets. The lenders don't care. They securitize it, sell it as security, so they no longer have the risk. They take a haircut off the top, make their money, they're out of it. They can relend, resell it, take their haircut, go back and relend. So they have basically no risk to the garbage that they sell. Again, did I mention something earlier about it's like we have learned nothing from 2008? Absolutely nothing. Rule number 2, stupid should hurt. And seeing Diamond, Melissa, some of y'all might appreciate this. I say Melissa because she's out in Hollywood, and she's our movie expert.
Yes, she is.
She's got all that down pat. But it reminds me. Yeah. Speaking of,
I just sent you an email of GB, West Hollywood parade.
All right, let's see. But while I'm looking for that, it reminds me of the movie Casablanca, which to me is a great movie on finance. If you remember, if you've seen the movie, if you haven't seen it, go sell all you have, buy a copy of the movie. But
oh, come on.
If you've seen the movie, when Captain Renault claiming that he is shocked to discover that gambling is taking place in the casino, even as he is handed his winnings. Don't know if this is irony or hypocrisy, but it's a great line or moment in the flick. So Diamond's comments struck me kind of in the same way. Shocked to discover that gambling is taking place in this establishment, when he was behind a lot of the retail side of the subprimes, and he is arguing or trying to get Morgan more involved in the private credit. Once he's gotten his money out of it, he doesn't care what happens to the rest. So I don't know if that's, the same scale as Captain Renault, but that was the thought that came to my head. All right, we're going to take a second and watch the renowned star Green Bean do his things.
There's a correction. That's from the Just Food for Dogs Pride Party. The big parade is tomorrow.
Okay.
Did you get sound on? Is there any sound?
Oh. Couldn't hear the sound, could you?
Nope.
All right. Let me redo this. Thank you.
Yeah, my necklace.
Yeah, for those new to the show, if a video has sound, I have to restart it from scratch in StreamYard because the sound doesn't come through. Let's try it now, see if that worked. There he is.
That's so cute.
Yeah, for those of you, who may be new or watching the show for the first time, this is a very dog-friendly show. The dogs are part of the family. And so if you've got, we had a night 8 months ago, when everybody was sending in pictures of their furry family members. Trying to think of the right word there. And we may need to do that again. It was just fun seeing everybody's, loves and babies.
We got to do the sexy dog calendar or the sexy cat calendar too.
Yeah.
For next year, send us your pooches in their sexiest positions. Because we had one of GB laying on his back, just, it was cute.
You dress them up in, a sexy little nurse's or fireman's costume or whatever. We had some interesting ideas last time. But we might.
Because why not?
Yeah, that would be kind of an epic calendar. What else? There's some numbers that came out this week. Chicago PMI, Purchasing Managers Index. It's a kind of a index of business conditions in the Chicago Fed region. And it came in at 35, which is extremely low. The way this index works is if the number is above 50, businesses are expanding, manufacturing is expanding. If it's below 50, they're contracting. And at 35, that's a number that historically has been consistent with a recession 100% of the time. Some people would argue that we've been in a manufacturing recession for a year or two because these numbers have consistently been below 50. So that's one big segment of the economy that's taking it on the chin.
Clay, just one more time. If I'm looking in different places, I have a limited screen. I'm not rolling my eyes, I'm just looking at the stuff I have to look at for this. So I do apologize.
Yeah, we took a TV and put it up there. So she has a rather large second screen, and she's still maybe deciding whether or not she likes it or doesn't like it or too big, too much. I don't know.
Platform to put it on, because if I could have them kind of beside each other, that would be great. But then there's a camera issue, and I just got to figure all that out. I don't know.
Yeah, we probably have to build a new studio to get the environment just right.
Are you mocking me?
No.
Okay.
We only have these two studios right now, and
in my bedroom.
we probably could use some technical improvements and expansion in those.
Mm-hmm.
Other data coming out, talked a little bit about commercial real estate and some of the issues that banks have with some of those loans. Well, the Conference Board, which is a business kind of think tank, number of economists, relatively large, substantial operation, they came out and said this week that commercial real estate, will face greater turbulence this year and next, as over $1 trillion in debt in loans come due that they'll have to refinance.
Now y'all can really see where I'm looking. I'm sorry.
Or try to pay off. The worst is still ahead. That's an exact quote from a senior economist, Kurt Raymond. Demand for office space has tanked. Maybe retail space is tanking. Interest rates are higher for longer. I mean, what do you predict will happen? Vacancy rates are down, utilization rates are down. You've got retailers, closing up shop. Interest rates are high, not falling anytime soon. What do you predict will happen? You don't have to be a magician to look at some of these numbers, spend a few minutes trying to understand what exactly they're communicating, and then develop some intuition as to what lies ahead. And we're not done. There's home sales. Home sales dropped to 72. Again, it's a index, the lowest since 2020, right in the middle of the subprime crisis. The index fell nearly 8%, which is not a fall, that's a crash. It's the
2020.
largest. Pardon?
You said the 2020 was subprime crisis.
Yes. Not subprime, COVID.
COVID, yeah.
Sorry.
It's all right.
The 8% drop was the largest in 24 years, which, if you do the math, look at the calendar, that includes the subprime years. So that's a steeper drop than we had during the subprime crisis. Home buying conditions are getting worse. Okay, so enough of real estate. Real estate sucks. Retail sucks. Manufacturing sucks. How about jobs? Hey, well, John Deere, major manufacturer, just announced it was going to have to begin major layoffs for both salaried and production people.
Is that just full-time? Or
yeah.
Are they going to add part-time?
No. Just cutting and closing. This will push the jobs lost so far this first few months of the year past the 500,000 mark. To give you some perspective, 2023, which was not a great year, saw 417 over this same time. So layoffs are only accelerating. And did I list the companies that had announced they were closing or going bankrupt? Oh, wait. Yeah, it's going to get worse. Okay, enough of that. Jobs suck, housing sucks, manufacturing sucks, retail sucks. Why don't we talk about, and the dollar sucks. Why don't we talk about gold?
Oh, geez.
We talked about gold last week and how Russia, China, and India are repatriating their gold back from the U.S., basically pulling their gold out of U.S. banks and bring it back home. Well, this week, India just announced that it had brought 100 tons of gold back from the UK. They've had gold stored at the UK since the 90s. First as collateral for a loan that the UK gave them, and then just left it there to use for trading and collateral for swaps and different things. Well, they decided nuts to that, we're bringing it back home. So this brings their total gold reserves to a little over 800 metric tons, 822 metric tons. Now, 100 tons, last week, some people asked me, what's the value of this? Well, 100 tons is roughly equal to $8,037,675,000. And that's at $2,500 an ounce, a troy ounce. And there are 150.7 troy ounces in 1 ton of gold. Now, for all you, Canadians, the Scottish, the English, the Europeans we have that end up watching this show, y'all can no longer give us grief about the imperial system. We're always talking about how the metric system is easier. Well, metric tons just completely blow that out of the water. 150 ounces in a ton just makes no sense. So gold hanging in there, but you've got the major BRIC nations continuing to withdraw and form in their own clique, which is only going to hurt the dollar more. That's really the goal of the BRICS nations, to trade in something other than the dollar. Now, food is a big issue. So how about food? How's food doing? I don't know how many of you saw this. But this is a fire, obviously, a 5-alarm fire at Farina Farms in Illinois, one of the largest chicken farms in the country. There were this week.
This is like the 4th or 5th in the past few years.
Past year.
Well, there were
millions of chickens are killed. And this particular facility is the largest free-range egg facility in the country, or was. It's now out of business.
Clearly.
So what's going to happen to the price of food? You know, you see whole flocks now being destroyed because of fears of the avian bird flu.
Clay,
Isn't that interesting?
is this a bug or a feature?
You got to ask. You know, when
Go ahead.
now, for those, let me give a little bit of background on that.
Okay.
For those that, you know, maybe new or haven't watched previously, we've talked about the World Economic Forum, headed by Klaus Schwab, which it basically is an organization that consists of most of the Western world's leaders. Bush, Kerry, Trudeau, Macron, Boris Johnson. The list is just all the high and mighty. And these people have a particular philosophy, globalization. They want basically all the nations working together. Schwab's vision basically is one government that works very, very closely with a few select corporations. That's his ideal that he has been working toward. Now, historically, this is not a new economic model. We have seen it before. It was invented by a guy by the name of Benito Mussolini in Italy, and he called it fascism, the perfect marriage of corporations and government. Well, that's what Schwab wants, and he wrote a book in 2020 titled The Great Reset. And some of you may have heard of that term, the Great Reset. Well, it's basically a notion that operates off this motto. The motto being, you will own nothing and love it. No, I'm sorry. You will own nothing and be happy. I've actually got the video. It's a 1.5-minute video. So I'm going to play it for you before we talk about it a little further. And this will explain to you in words better than I can offer up what we mean when we say the Great Reset. Turn on the sound. Here you go. It's a 1.5 minutes. All right. I'm going to pause for just a second. Melissa, can we have a moment of silence for those poor innocent chickens?
Yes.
That's what I really love about this channel, is that in the family we have some really dear, I don't know how else to describe it, just sweet spirits, very sweet souls, love animals. And Melissa, I've often said I want to come back as, Melissa's puppy, because Green Bean has it really, really well. But we'll just take a moment of silence for the chickens.
Bless you, little chickens.
And actually, I appreciate the suggestion, because I don't think most people and most shows, YouTube channels, would make that suggestion.
Mm-mm.
And it is because this is just like this is a little family. And, we just encourage and support everybody, and they do us.
And Clay, I know you probably haven't looked at this, but I wanted you to see it if you do not mind. Nothing to see here. Recent fires at food processing facilities have some claiming, and this is 2022. There's more going on than meets the eye. Experts aren't convinced. The rumors came to a head on April 22nd when Fox News host Tucker Carlson stoked the conspiracy theorists, because we're all conspiracy theorist flames, asking his viewers what's going on here. The story gets weirder. Carlson, who hosts the most watched news show on cable, continued food processing plants all over the country seem to be catching fire. A guest on his show later called the incidents obviously suspicious. Why are so many food processing plants and warehouses catching fire all of a sudden? And as I was sitting in the studio getting ready for the report, a plane crashed at a General Mills food facility in Georgia. I discussed the issue on Tucker Carlson, but they're saying there's nothing unusual about the fires that have occurred in food processing plants over the first few months of the year. In 2019, the number of fires at all manufacturing or processing plants in the country topped 5,300, nearly 15 a day. Additionally, more than 2,000 fires occurred in agricultural, grain, and livestock and refrigerated storage facilities, which could include all food processing operations. I don't know how y'all feel about that, but I'm thinking that's a little suspect.
Well, to me, the difference is, they talk about the number of fires. Yeah, you might have a little fire breakout, but if you look at that video, it's impacting. It's like somebody set off a napalm bomb. You've got black smoke pouring out, which most chicken houses are made either from wood or tin. You really wouldn't see that kind of smoke pouring out of, substantial chicken houses. There's some sort of fuel, major fuel or accelerant. And it's not just on one end, like a gas tank or a diesel tank was stored there and it blew up. It's throughout. The size of the fires, to me, the deaths of the number of livestock is greatly increasing. I haven't done any significant research on it.
I haven't either, but I started hearing it in the early 2021 that there were just an unusual amount of food processing plants, especially meat packing plants, that were just all of a sudden catching on fire.
Yeah.
They're not cooking food in a food processing plant. There shouldn't be a whole lot of gas or anything around.
Yeah, they're fairly highly regulated, and they don't deal in flammable or combustible fluids. It's water, blood, and meat.
Yeah, I'd seen somebody say that it was because of the cooking. I'm like, well, it's meat packing. They're not cooking anything.
No. All right, let me throw this back up. Just a couple of main points. You'll own nothing and be happy. What'd you have, Ellen? Did you want to say something else?
Jane.
Jane. They're getting dangerously close to Marie Antoinette. Let them eat cake, or should I say bugs? Exactly. And if you'll notice, that's contained in this video by the WEF. You'll also, if you go to WEF's website, this video is no longer up there.
Really? Since
They've
when?
taken it down.
No kidding.
I checked like 6 months ago,
and
they had taken it down because in this video, they're very honest about what their goals are. You will own nothing. Own nothing. Who owns nothing in history? Category of people generally referred to as
socialists, Marxists,
slaves.
Slaves, yes.
Slaves. So you'll own nothing. They'll take away Americans' greatest investment, which is a house. Most people have the vast majority of their wealth from owning their house. So you'll own nothing. You won't have that opportunity. You'll own nothing. Whatever you want, you'll rent. It'll be delivered by drone. You'll never need to leave your house. How cool is that? The U.S. won't be the world's leading superpower. Now, I know there's some people out there that would probably cheer that. Some ways I can't blame them.
Hang on.
But
hey, Jeff, what's going on?
somebody will own it. It just won't be you. Exactly. And then Jane's comment, chicken manure is highly flammable. It is, but it's not explosive. And they clean the manure out every day, regularly. And it's
usually
they
do wash it out in a chicken house.
Yeah. And it
like a hog house.
Yeah. Like I say, I don't know what caused that fire. It just doesn't look like a normal agricultural fire to me, particularly with the rich black smoke and burning, 50, 100 feet high. Handful of countries will dominate. Well, what countries exactly will dominate?
Look at the flags.
You won't die waiting for an organ donor. We won't transplant organs. We'll print new ones instead.
I'm good.
That's interesting because I just saw where Mayo Clinic is still refusing transplants to people who are not vaccinated.
Still.
So what will you have to agree to get a new organ? I'm curious.
We're still second-class citizens.
You'll eat much less meat. This is fascinating to me because if you watch the big conference at Davos, they're all eating huge steaks, lobsters, et cetera, et cetera.
And Clay, how many cows do you think have been, I know you have kind of kept up with it, have been culled in the past couple of years?
In this country, I honestly don't know exactly. I do know that Ireland is trying to cull 220,000. The Netherlands, Denmark, is trying to close 5,000 farms, and all of this for supposedly climate change. But the goal is you'll eat much less meat. So how do they get you to eat less meat? Can they just sit there and ask you, hey, cut your meat consumption from 2 pounds a day to 20 pounds a year? It won't happen. Supply. They start impacting supply so that the price goes up and poor and middle class can't afford it. Believe diesel fuel burns black. It does. And that was the point I was making earlier, is usually there's a gas tank stored at some distance from the house. But if you look at those flames, They're huge, they're massive, and all of them are pouring out the black smoke. It's just not one localized fuel dump or fuel container that is burning.
And normally farms like that don't keep diesel fuel. I know you said close to the house, but it's not running into the house at all. I mean, it's
No.
not anywhere near it.
It's separate
Hmm.
for that reason. And you know, the black smoke, that's a carbon-based fuel. That's a carbon-based fire. I mean, a carbon-based fuel feeding that fire. So, you know, diesel, gas, etc., would all do it. But eating much less meat. It will be an occasional treat, not a staple. Obviously, it's for the good of the planet, which is a whole separate discussion. Now, what do they want you to eat instead of meat?
On that point, Jane Post was on a Tuesday night Q&A, and she lays out everything you can eat and what you can eat as far as plants and medicine and all that stuff. So go watch it.
Yeah, and what does the WEF, the Great Reset, want you to eat instead of meat?
Bugs.
Bugs. And you've got Bill Gates sinking a ton of money into developing bug-based food. He is also a very noted member of the WEF. Refugees. We have to do a better job welcoming and integrating refugees. It's like, you know, we don't have enough. We need more to pay for. They estimated that, was it 2 billion people would be displaced? So
Where?
Yeah. Where are you going to move all those people to?
But where are
Good
they coming
question.
from? Where are they coming from and where are they going to go?
Poor areas of the world. Areas where they can't grow enough food, etc.
Well, we already took in about 15 million.
Yeah. It's going to, you know, their goal is to make it a little worse. So you get this 1.5-minute video that does a great job detailing exactly what they want. And like I say, they didn't get the reception they had planned, so they ended up taking it down. I downloaded it first. The Great Reset. Is it a feature or is it a bug?
Feature.
You know, you look at these goals established by the elite, and then you see events occurring which contribute to the fulfillment of these goals. And you've got to ask, like Ellen did, is it a feature or a bug? Is it just an accident or a coincidence that these things happen which improve the odds of this Great Reset becoming, you know, reality? Feature or bug? I kind of agree with Ellen that it's a feature.
It's a feature and you'll eat bugs.
But nobody's ever made me.
You went out on me.
Sorry.
You said that's all I heard.
I was just saying that I believe it's a feature as well. Also saw where the administration has promised to rebuild Gaza, a war that we're not involved in, an area that has received hundreds of billions of dollars in aid for years, and who took that aid and used it to build tunnels. The most extensive tunnel network in the world, apparently. Mm-hmm. And we're offering to rebuild Ukraine and Gaza when our own country is decaying and we can't rebuild it. We can't repair the infrastructure in it. We're 35 trillion in debt, adding another 2 trillion in debt this year. Can somebody explain this to me? Because I really just don't get it.
I thought, man, they were going to build a dock, right? And didn't that float away or get blown up or?
Yeah, they had some rough waters and it tore off, and $320 million worth.
So glad we spent that money. That's awesome.
We'll find more ways to waste it.
Mm-hmm.
So, Jane, the FDA allows the use of some insect-derived ingredients in food, including cochineal extract, a red colorant, and carmine, a red dye, which are derived from the bodies of a type of insect. Yeah, there's all sorts of weird stuff that's allowed in the food, just kind of practical realities that I won't get into. But I'm not going to be serving up a plate of cockroaches to anybody instead of a good steak.
Is that why people are so allergic to it? I wonder. Red dye number, whatever it is. They also allow so many insect body parts in things like flour,
pepper,
rice, pepper.
Yeah,
like cornmeal.
They call it particulate matter.
Yum, yum.
So, yeah. So there is a practical reality that, there are some of these things, minute amounts, small amounts in the food we eat. But in terms of just eating a whole plate full of them, while the elites get steak and lobster, yeah, I don't think so. Not going to earn my vote off that one.
Yeah, food products, yogurt, candy, and beverages. That is that red number 5. Is that it? Oh gosh. Okay. Do not eat fig Newtons.
I used to love, and I still would love fig Newtons. I don't know why you say not to eat them. I'm willing to bet. I don't want to know, but we're going to find out.
Tell him, Jane. Tell him.
Yeah, throw it on out there.
Again, let me get the link to Jane's. It was so good. She's the best. Go ahead. I'm just trying to find the link.
All right. Well, I think I'd be kind of remiss if I didn't talk about the biggest. Thanks, Jane.
What did she say? Because I'm looking at the.
There you go.
I can't see it.
It allows the highest amount of rat excrement.
Oh, good God. Y'all, no. I think I gotta go here. Oh God, that's awful. Just saying.
All right. Kind of the last thing that I had, we're still gabbing about stuff, no problem. But the last thing I had was I kind of would feel remiss if I didn't, at least mention or talk about the biggest news item of the week. And that obviously is the Trump trial. Well, I found something that I think is relatively important. It is the single most important reason why Trump lost the case. I give you Jim Cramer. Trump never stood a chance. And for those of y'all new to the channel, Jim Cramer has a rather impressive track record for error, of constantly making bad calls, bad decisions. So he's entertaining. But as far as investment advice, probably shouldn't be your first choice. Anyway, Cramer.
Hang on, the link is up here now. I know if you click on it, you will go to all of the things that you. Where'd it go? There you go. In the comments, if you click on it, go to all the things that you Can't eat, you shouldn't eat, what you want to look for, what you don't want to look for. Jane is absolutely fabulous when it comes to being an herbalist. Did you share my screen? No.
Yeah, I thought you might have the video or something up. Yeah, but that's where she was picking or tracking down the video. Sorry.
Yep, that is the link. So Jane is laughing. Oh, no rat poo. Sorry, ain't doing it.
Yeah, Dave points out that red dye number 3 or 40 are the bad ones. That's one thing I'll commend Europe for. They have much tighter regulations in terms of a lot of these additives that are in our food. And, I really don't need dye in my food at all. I don't care what the color is.
If it's a strawberry, it doesn't look red, that's fine. It's a strawberry. You don't have to make it redder.
Yeah, I just, and that's one reason why we're going more towards trying to, grow our own food. We encourage the same, trying to eat a little healthier, a little cleaner. And it's not easy in this country. It shouldn't be so damn difficult. You look at the ingredients in food manufactured in Europe, the same food, ketchup or, whatever, versus the US, entirely grossly different ingredient list. And, I've eaten food in Europe. In a lot of ways, it's as good or better than what we have here. And I grew up on the food here. But I love the food in Europe.
And I think
so. Anyway, I won't get off on that tangent, but nonetheless.
And I think back in the day too, there was a difference. I mean, like, those of you members can watch the macaroni and cheese fiasco on the channel. And my grandfather is 97 years old, and he was married to my grandmother for 62 years, and she made this at least 3 or 4 times a year. It is a hardtack in a bowl, but it is so good. But I think back in the day, he would tell me as growing up, and they had chickens, and they had a sugar barrel, and they'd have to turn the chicken around at night because they lost the top to the barrels. And so just so she wouldn't poop or lay eggs in it, and she would just sleep there. But I think, it was simpler. There was not so much processing. There wasn't so much crap in our food. There wasn't engineered things that shouldn't be there. And I think
people weren't as obese. They weren't so addicted to sugar.
No. And, he grew up, his family grew their own food, and my grandmother's parents grew their own food, and I'd go and pick strawberries in their yard, and blueberries and raspberries and all the berries and tomatoes. And it was, they didn't use pesticides. If some bugs got in it, oh well, they used natural ways to get rid of them. So anyway, you're welcome, Jane. You are the best.
Yeah, we appreciate you taking the time and the effort in doing that.
Mm-hmm.
Like to read old cookbooks. Recipes are totally different.
Here's my keyboard. I'm having
nice keyboard.
Yeah. My light's in the way, so I can't see. I guess I could look over here. Sorry.
Yeah, but was just thanking Jane for her time and efforts in putting together, the discussion during, the Tuesday night. It was Tuesday night 2 weeks ago. But it was a very informative, interesting discussion on plants, foraging, that kind of thing. So
yeah,
we do try to encourage people to become more self-reliant. And so we'll do it again. Anybody have any other questions or comments?
I do. Has everybody hit the like button, the subscribe button? It's free, turn notifications, all that good stuff. Also, book club will be June 5th, which is Wednesday. If you don't read the whole book, that's fine. No problem. It's Naomi Wolf Facing the Beast. It'll be at 7 p.m. on Zoom, and we will be putting the link on the community page. Also, if you don't have time to read the book and you just kind of want to go over a little bit of what she's saying, if you go to her Substack, substack.com, and then search Naomi Wolf, and you can read a bunch of the things that are actually in the book, just to give you kind of a little overview. So that's one way that you can do it, hang out with us. And we usually have a really good conversation about the books we've done. This is our fourth?
Yeah.
Yeah.
And, we try to pick books that, encourage some thought and, controversial books are good. And Naomi's is going to be a little bit controversial. So, come join us for the fun, the discussion. Keep in mind, you don't have to agree with everybody else. In fact, there are really rarely times in which I do. But that's okay.
Obviously.
Yeah. Sometimes I don't even agree with myself.
Yeah, and you can be anonymous. You don't have to state your name. You can make up a name and put it on there. No big deal. You don't have to show your face. A lot of our YouTube people like to be anonymous. That's fine. We have no problem with that. But it is a good time, and it's a good time to discuss differing opinions. And I think that is something that we are lacking in this country right now. I think that with all the division going on with politics and everything else, it's good to just sit down and have a civilized discussion about things that we don't agree about. Fair enough?
Agreed. Preach it.
Sorry, it's just true, and I'm actually tired of all of the division, and I think people really should, it's not going to kill anybody to sit down and have a conversation with somebody else, but we get so angry about somebody else's opinion, and it doesn't have to be that way. If we would learn a little bit more from each other and just say, okay, I see where you're coming from. I might not agree with you, but that's okay. Not a big deal. But understand where you're coming from.
Yeah, the goal in these is to encourage discussion and encourage thought. And, to do that, sometimes you have to have different views and opinions. And that's cool to me. I mean, being an academic, I kind of do that for a living. I mean, we're always fussing, in academics, we're always fussing each other and trying to tear down the other person's papers, peer review process. And we understand that's ultimately what makes the papers better. And it's when the peer review process breaks down and it becomes just rubber stamping that you get some of the trash that, we've seen in academic publishing. There was a journal publisher that just recently took down 11,000 articles because of doubts about their veracity and sources. So, there's value in differing opinions, value in, having a common goal of seeking the truth that nobody has an exclusive on. So y'all join in the fun. We look forward to it.
Clay might shut you down, but I promise you I won't. And I'll slap him if he does.
And trust me, she means it. She's feisty.
I can be.
Anybody have any other questions, comments? We're a little bit over time, which is okay. I do know that some of y'all have a bedtime, particular night time. And so we try to be, respectful of that. Plus, the dogs know what time it is, and they're expecting to be taken out.
I can hear them downstairs going, what's going on?
Yeah. They literally can follow the clock. It's a little weird. So we appreciate y'all. Appreciate you joining us tonight, being with us. Appreciate your thoughts and comments. Dave, welcome. Glad to have you. Look forward to seeing you. You know, we regularly are on Tuesday nights Q&A, which is kind of a time for y'all to ask questions or suggest topics or bring up discussion. You know, I will have some things to comment on and say otherwise if they're not, but the idea is to try to encourage more conversation and questions. And then Wednesday's the book club. It'll be on Zoom. The link's on the community page, or will be on the community page.
Will be.
And will
yet.
be. Yeah.
Mhm.
Will be. And then Saturday night, a week from tonight, 7 o'clock. Most all the times are 7 o'clock Eastern.
It's Saturday now, so we'll do Tuesday and then Wednesday and then Saturday.
And Wednesday is the book club at 7 or 8.
7.
Okay. I
Always
want to
7.
make sure.
We try to make it easy for everybody.
Yep.
Yes, there will still be a stream on Tuesday. Yes, ma'am. So I want some major Pride Parade film. You got to send me some.
Yeah, I want video of Green Bean wherever he is, because it's just happy video.
I want to see him in the pink car in the Pride Parade. That would be awesome. I love it. He was so cute. You will have it. Awesome. Thank you, Melissa. GB's the best.
All right, y'all. Do very much appreciate you being with us tonight.
Absolutely.
Hope you found the time profitable. We appreciate you. We love you.
Love you too. I mean, love them too.
Y'all have a great week ahead. We'll look forward to seeing you Tuesday.
Yes.
Our time is up. We thank you for yours. Good night, y'all. Blessings to you.